Meanwhile, Britain and the United States are reportedly discussing a partial trade accord, which could take effect on November 1, the day after the UK is set to exit the European Union. For more from the street of London, here is my colleague Simon. Hello, Simon. Good afternoon. All right, Simon, if you can hear me, South Africa's drug firm Aspen is to pay £8 million to the NHS after an investigation into the supply of a life-saving drug to thousands of patients. What is the story around this, and how's the shares of Aspen reacting?
Yes, so this is after an investigation found that this company, Aspen, engaged in anti-competitive practices that pushed up the cost of a life-saving drug for the health service here in the UK. The investigation found that Aspen struck 2 deals to pay 2 rival companies to stay out of the market for the drug, making Aspen the sole supplier, and they were then able to set the prices without facing any competition, and therefore they raised the prices. It is the first time that the Competition and Markets Authority has secured such a payment to the NHS as part of one of its investigations. Aspen, which is also facing a fine of up to £2.1 million, supplies the NHS with a drug called fluorodostericine, a life-saving medicine mainly used to treat Addison's disease. It is paid for by the NHS. Here's what the Competition and Markets Authority have said. The CMA launched this investigation because we consider it unacceptable for the NHS and the taxpayers who fund it to have to pay millions of pounds more than they should have for this life-saving drug. During the CMA's investigation, Aspen made an approach to the regulator in an effort to resolve the case. The company has admitted that it was part of an illegal anti-competitive deal, and it agreed to make an £8 million payment, the likes of which we haven't seen before, which means the government will not have to launch court action for damages. The CMA said it is continuing its investigation into 2 other unnamed pharmaceutical companies involved in the anti-competitive deal.
All right, still on corporate news, Sports Direct is on the news today as Grant Thornton quits as auditor. Why is Grant Thornton quitting, and is this having any impact on the shares?
Yeah, the answer, I think, is yes. I think it will have an impact on shares, Jimmy. An auditor for a massive company like Sports Direct, which floated on the London Stock Exchange in 2007, is very standard practice, and yet Sports Direct has asked the UK government to clarify how it might act if the troubled retailer becomes the first major listed business to fail to appoint an auditor, and that's what the position they're in at the moment. Grant Thornton, which has audited Sports Direct since it floated on the Stock Exchange in 2007, has told regulators that it intends to quit after the retailer's annual meeting of shareholders in September. The decision leaves Sports Direct struggling to appoint a replacement auditor, as it has admitted that it had not previously persuaded rival accounting firms to tender for its auditing contract. So this has taken them very much by surprise. It'll be interesting to see if and how the government responds to that question from Sports Direct. Some people seem to think the government themselves may step in and appoint their own auditor, an auditor of their own choice for the company.
All right, it's midweek trading. Bring us up to speed with equities and currency trading for today. How much reactions to U.S. delayed tariffs and some Chinese imports, and of course, the latest inflation numbers released today?
Yeah, so early trading today saw the FTSE recovering on news that the Trump administration, as I think you've mentioned, was going to delay the 10% tariffs that they'd threatened to put on Chinese imports, including a surprise drop in industrial growth. But then China went and reported a load of weak data for July, and that has affected the markets here. So the FTSE is down across the board at the moment. The FTSE all-share down 0.92%, the FTSE 100 down 0.91%, and then the FTSE 250 is down 0.79%. This potentially an indication that the trade war with the world's biggest economy has been affecting China's health, and therefore the market's reflecting that, and weak data released from China today. The pound, surprising a few people today, it's usually falling, as we've been hearing for months on end, but today it is up on the dollar by 0.21% and also up on the euro by 0.23%, while it is down very slightly on the Japanese yen. That's down by 0.3%.
All right, Simon, I guess Brexit is still on the mind of investors. Let's continue to keep a tab on those developments and enjoy the rest of the day.
Thank you, Jimmy.
And stocks in Asia Pacific edged up today as the U.S. announced a delay in the implementation of tariffs on some Chinese goods. Shares in mainland China rose on the day, with the Shanghai Composite gaining 0.42%. The Shenzhen Composite advanced 0.69%. Meanwhile, the Hang Seng Index in Hong Kong was fractionally lower. Elsewhere, Japan's Nikkei 225 rose 0.98%, while the Topics Index also advanced 0.87%. In South Korea, the Kospi gained 0.65%, and Australia's ASX 200 rose 0.42%. And in the U.S., stocks were set to open lower today. At around 3:10 a.m. Eastern Time, Dow futures indicated a negative open of more than 37 points. Futures on the S&P and Nasdaq were both slightly lower. A market focus is largely attuned to global trade developments after the U.S. delayed tariffs on some Chinese imports in the previous session. On the data front, import prices for July will be released at around 8:30 a.m. Eastern Time. In corporate news, Tencent, Macy's, and Canada Goose are among some of the companies expected to report their latest quarterly results before the opening bell. Cisco Systems, Canopy Growth, and NetApp are some of the companies set to report their latest results after market close. All right, away from the equities market there, let's look at the current, what's happening here on the African continent, and starting off here in Namibia, where the central bank has cut its benchmark interest rate for the first time in 2 years as it seeks to boost the economy and maintain its currency's peg to the South African rand. The Bank of Namibia's Monetary Policy Committee reduced the rate to 6.5% from 6.75%. The move follows after South Africa's central bank reduced its repurchase rate to 6.5% last month. Like the other members of the rand's common monetary area, Namibia's central bank follows the Reserve Bank's policy moves very closely, and it has diverged from its neighbors' interest rate decisions only once since 2015. Namibia's dollar is pegged to the rand, and while the arid Southwest African nation's economy has contracted for 2 straight years, a bigger cut that resulted in an interest rate that's lower than South Africa's would make it difficult to maintain its reserves and the currency peg. And investors have been dumping South African government bonds at a rate of almost 2 billion rand a day in August, with issuance increasing and a downgrade to junk a looming possibility. Non-residents have sold a net 14.4 billion rand of the debt in August so far, and that's an average of 1.8 billion rand a day. The sales have wiped out inflows at a time when the country needs foreign investments to close a current account deficit that was equivalent to 2.9% of gross domestic product in the first quarter. And so we'll take a break now, and when we come back, we'll take a peep into Africa's most industrialized economy as it continues to battle for survival. To stay with us.